John, there was a meeting of G7 finance ministers, a phone meeting, at which they pledged to use all their policy tools. And now you have the Fed moving first, you could say. What prompted this particular emergency rate cut? Because it's a big one.
Well, I would love to know. I mean, the FOMC meeting is coming up on the 16th. We're 2 weeks away. Markets are functioning normally. We had 3 corporate bond deals, I think, announced or come to market this morning. So it's not like the financial crisis of 2008. It's not like long-term capital back in 1998. And the economic data have been solid. So I'm quite frankly, the Fed signaled it was probably going to go 50 with Powell's statement on Friday afternoon, which was unusual in and of itself. But now you have the Fed cutting rates, and the equity market was up 1,200 points or so yesterday on the Dow. I worry about the moral hazard consequences of this.
Well, that's what I was going to get to next, because we're seeing a reaction in the markets. Obviously, the VIX is down to 28. We've the 10-year yield now at 116. So a pretty massive move on the 10-year yield. Stocks also turned higher with major indices up 1.5% now. Michael McKee, what calculation did the Fed do to suggest that this wouldn't sow more, maybe not panic, but something close to it into the market?
Well, probably, as John was saying, they looked at the market reaction yesterday, and the idea that the markets seem to have priced in the worst of it. The question is, again, we don't know yet because we haven't been able to talk to Jay Powell. Why did they do it today? Why did they feel they couldn't wait? Now, it does seem that the markets had demanded it, and you do have that moral hazard problem that John was talking about. But if you're going to do it, and they had signaled last Friday they were going to do something, then the question becomes, why wait? You might as well just get it over with, and I think that's probably what they decide.
But why 50 basis points, John? There's already a question mark out there as to whether, a rate cut can actually improve things, for a supply side shock, and that's clearly a little bit of what we're getting. I mean, it's turning into a demand side shock. But why would a double rate cut be better than one or none at all?
Well, maybe we should ask the CDC. Maybe interest rate cuts are a cure for the coronavirus. I don't know. I cannot think of a logical reason other than you giving into the markets or potentially giving into tweet responses from a certain Twitter account. But there's no evidence yet that there's been any significant impact on demand. And to the extent that it's a supply chain shock, and the ISM yesterday suggested more supply chain issues with longer delivery delays, rising order backlogs, I don't see how interest rate cuts help the supply chain.